Hello and welcome to Moneyline. This is Matt McCall. It is Friday the 13th, mind you. November, of course, 2020, and we get the market rallying today. So see if we could get this into the close. I got a little bit of new setup here I'm going to talk about. We're going to start having the charts behind us. Every day this set's getting better. I can't wait. And we're talking EVs today, electric vehicles. You've asked for it. I'm going to do it. I'm going to run through all the stocks in the sector, give you my view. They are moving like crazy today. All this and a market update, Bitcoin, you name it, coming up on Moneyline.
The buck starts here. Moneyline with Matt McCall.
All right, folks, thanks again. This is Matt McCall. It is Friday the 13th, 2020. November, of course, is the month. And as you can see, we got a little bit different setup here behind us. You know, we kind of swapped around here to the little podcast room. We used to have the back looking into the office, which was a great idea, I think, when we had a lot of people in the office, but due to the situation, we don't have a lot. And we basically just stared at our marketing manager. And I think last week he was watching a soccer match for the most part. So to keep him out of trouble, we decided to flip it around. Plus, we got a screen. And we have coming, it's supply chain issues. We have a big touch screen. We got 2 new tables. We're going to do some shows where we stand up, where I can actually touch the screen, show you some great things on the charts. But in the meantime, I thought I would just try this today. I got in here early Friday, and I was just playing around. I noticed that I was out yesterday. They bought a new TV while I was out, so I set it up, and we're ready to go. So we'll see how this turns out. But right now, we have the markets up. We have the S&P, up right now about 0.6%. And behind me, you can see there, that is the SPY, the Spiders, tracks the S&P, the Spiders ETF. And I know it's not easy to see, so don't start complaining you can't see it. This is just trial. We're trying something out, just so when I pull up a stock, you can see kind of the longer term chart behind it. This is the daily chart going back to June, so it's not looking back too far. And as you can see, I can zoom in and zoom out and show you what's going on. But obviously, that's a longer term. This is going back to the bottom in March right here. So I'm probably going to keep it right here. But this is just to give you an idea of the trend of the stock that we're in. Again, we're going to get to the point where I'm going to be able to draw on the screen. You'll be able to see fun stuff. I'm going to be able to switch between looking at me, looking at the chart. We're going to have very high production coming up here soon. But just bear with us as we move along. It is COVID, so it's tough to get people in the office to get some of this stuff done. All right, so I want to talk about a few things today. One, the show is going to be based on electric vehicles and the stocks that are moving. But before I get to that, let's just talk a little bit about the market and kind of where we are right now. It is Friday 13th. The last time we had a Friday 13th in the market was back in March, I believe, where the market was up huge. I don't see that happening today, but the market, as I mentioned, is up about 0.6% right now, which is nice. And keep in mind, we're only a few ticks away here in the S&P 500 from closing at the best level ever. So as much as you hear out there right now that things are still a little dicey, I saw some big hedge fund manager this week calling for another huge sell-off. Ackman, who's the biggest jackass out there, even though I own some of his SPAC. Ackman, he came out and was basically crying these alligator tears in March, saying how bad things are or how bad things are going to get. Meanwhile, that week he's buying. So, and let's take this for what it's worth with these guys. I don't trust them as far as I could toss them. These days, I probably can't toss them that far. So let's not worry about what these big guys say, because a lot of times they're talking their book and moving markets for undisclosed reasons. But we know why, because they're trying to make money off the average investor. So who the hell cares what they say? I will say this. I did some buying yesterday for some clients at Penn Financial Group, so I do see some buying. We had a newsletter go out where we added 2 new stocks to the newsletter for subscribers of investment opportunities. And again, you can always go to investorplace.com/moneywiring. Click on there, take you right to investment opportunities. $99 for a year, instant access to all of our portfolios. So if you're interested in that, please check it out. So markets are doing well. I mean, I really think that things are holding up nicely right now. One market to look at too is the Russell 2000. It's kind of more of the small mid cap. I'm actually having trouble seeing this damn thing too. But you can see right here how nicely that's up. That's up 1.5%. And If it closes here, it would be I'm going to zoom out a little bit here for you guys. It would be the best close ever, breaking above this high. This is from 2018. This is going all the way back right now to 2006 on the IWM, which is the Russell 2000 ETF. So to me, we close here, and I've been saying this for a while. The small caps are really the place that you want to be. Small caps to me are going to lead, and the other sector that I've been hot on for a while now is biotech, and biotech's having a nice day today as well. And again, this is an all-time high right here. We hit earlier this year. We're closing in on potential breaking up from a triple top. That'd be a huge get here for the biotech sector. That'd be a big breakout, and I think that's inevitable before the end of the year. So that's a sector you want to keep an eye on as well. But overall, things are looking really good. And I'll get to a couple of your questions, but let's get into the meat of today's show. And not every show, but I want to start, kind of nailing down a topic so I'm not all over the place. If anybody knows me, I'm typically all over the damn place. I can't seem to concentrate on one thing. As I just cut my thought off in half there. But, electric vehicles, I've been on this kick, autonomous vehicles, for a couple years now. And getting a lot of questions recently, and a lot of the stocks are moving. So let's go through a couple of them. And I'm going to go kind of in the order of how big they are. I'm going to pull up Tesla first. So let's take a look at Tesla. We know Tesla's had a great year. I mean, look at this run up from March to where it is now. Hit $500 a share in August, and we've since been consolidating. We're at 410 right now. It's down slightly today, down about 0.4%. But I got to tell you, I love this consolidation pattern. And let me zoom out a little bit more here for you. And just look what Tesla's done. This is back in just 2019, folks. 2019, the stock was down in 40s. The 40s ran up to 500. That's over a 12xer right there. Ran up, and now this is just consolidating. That's what you call a flag pattern, consolidation pattern, pennant. You call it all kinds of things when it comes to technical analysis. My point is, when you have a stock that runs up like this and then goes sideways for a while, that is actually extremely bullish. What's even more bullish here, and let's see if I can actually get this to work, is what I'm about to draw on here, and it's not going to be the best drawings. I'm terrible at drawings, but what you can see here is this line. You see how this is? It's called higher lows. So every time you pull back, it's going to be a little bit higher. That means every time the stock pulls back, Tesla stock pulls back, there are people jumping in and paying a little more for it. That's very bullish. And then on the top side, you're getting something very similar where it's basically pretty flat. If you look at it, it's right around the 450 range where we've been recently. And when we break above that, my goodness, it's a big breakout. This pattern is what you call an ascending triangle because the bottom is ascending. A break above that 460, 65 level, probably around right to 5 and change. Above that, you're an all-time high. So to me, things look really, really good here with Tesla. Keep in mind, Tesla's a big company. It's a $390 billion company. So let's skirt over to what people are referring to as the Tesla of China. And of course, if you don't know by now who that is, that's NIO, symbol NIO. The stock is up another, 7.5% this morning. If you can't tell what time it is, it's 9:44 East Coast time up there. But this stock, I do own for Penn Financial Group clients for some of them. And we bought less than a month ago, and I think we're up well over 100%. Oops, sorry about that. Well over 100%, closing in on 200% if I'm not mistaken. I mean, this stock has just been bananas for us. They report earnings November 17th, so they report earnings next week. So keep that in mind. This is $69 billion company. The numbers they keep coming out with are great. This is a huge sector. All that being said, going back to May, NIO was a $3 stock. You can't go straight up. We're going to have a pullback. So I'm not surprised we get some type of pullback here. That doesn't mean I'm going to sell and probably ride it because I think it still can be a much bigger stock. I mean, this could be a $100 billion stock in the next couple of years, and that's still a triple from here. You're looking at $150, $160 a share. I think it's doable. Again, but you're not going straight up. But look down here. These big green lines, those are all big money coming in. You got big money coming into this right now. Kind of moving next in line when it comes to valuation is XPeng. And XPeng came out with earnings yesterday, and you can see what this stock has done. This is a recent IPO from August. It rolled down in the high teens. It's up today about 7.5% as well, 8% to 48.21. Up huge yesterday. They came out. It's a $34 billion company. And they came out and their estimates were to lose 18 cents a share. They lost 32, so that was worse than expected. But revenue came in for the quarter at 293 million versus estimate 284.5. Gross margins last year were actually negative 10.1%. Now it's positive 4.6. That's a big move there. Deliveries in the quarter that ended in September, 8,578 deliveries. That's up 266% over last year. Just from the previous quarter, it's up 166%. For Q4, they're looking at deliveries about 10,000 EVs. That'd be up about 211% over the fourth quarter of last year, and revenue of about 332 million. So again, a nice little gain that you're seeing there. And of course, somebody just turned on the light behind me in the office behind me. Sorry about that. So that's going to be an issue we need to think about. Of course, nobody ever comes on an issue. That's one of our competitors, and they stink, but nobody comes in, and of course, they came in now. So I apologize for that brightness that came on. I think it's just a cleaning lady. So that's XPEV, one to keep an eye on, but again, they've run so much, these stocks are going to pull back. Another one is Li Auto, symbol LI. That is up huge today. It's up 21% right now, and it's actually off the highs. It was up almost 26%. They had numbers this morning. This is about a $31.5 billion Chinese company as well. Their revenue came in at 370 million versus an expectation of 342. Over just last quarter, revenue was up 29%. They lost 8 cents. Estimates looking for a loss of 4 cents. Vehicle deliveries in the third quarter were 8,660, up 31%. Gross margins, I love this. Last quarter, 13.2%. They came in at 19.8%. That means obviously gross margins means they're making more money, profit on every dollar that's coming in. That's fantastic. They think Q4 deliveries will jump up from the 8,660 last quarter to between 11,000 and 12,000. That'd be an increase just from last quarter between 27 and 38%. Revenue looked to increase between 24 and 35% next quarter alone, not year over year, just next quarter, between 458 million and potentially up to $500 million. So, these are real companies. They're doing real revenue. This, I will admit, I own the stock. I bought this stock less than a month ago, and I'm up big time on it. So I might sell it today. I don't know, because just take a profit and run. I have no idea, but I do own this one because, as you know, there's different tranches. There's the newsletters that I put, recommend stocks for. There's clients that Penn Financial Group I buy stocks for. Then there's mine I buy. None of them ever overlap. We keep those separate. So I just happen to own this one. Clients own NIO, own NEO, and of course we have a couple in the newsletters as well. Another one that's up huge today. Another Chinese company that I'm not going to mention. So those are basically the big three. If you want to talk about the big three, we used to have back here in the United States. These are really the big three in China right now. Probably 20 years behind where we were back then, but these are the big three. NEO at 69 million, X paying around 34 billion. Sorry, billions, 69 billion. X paying around 34 billion, and Li around 31.5 billion. So both those about half the size of NEO right now. Then, if you want to stick with China real quick, let's look at Candy. KNDI. Candy is a stock that was one of the original kind of EV type stocks. It's been around a while. If I zoom out, I can show you all the way back to it went public in 2008. Went all the way down to less than $1, rallied up to 22, went down back to $2. Now it's trading at around 7.69, up about 11% today. Up big today, just kind of riding the coattails of everybody else. It's a smaller company. It's about $400 million company. They reported earnings on Monday. They were mixed. This is one I'm just not as big a fan of. Personally, I like the big three much better, but it is one if you want to keep an eye on. It's definitely a smaller name over there. Now let's move back over here to U.S. and talk about some EVs over here. One that really catches my eye is Hyliion, and I might be pronouncing it wrong, but I think that's right. HYLN. This was a SPAC that went public via the SPAC. You can see here it was trading at $10, and then on the news it rallied up to 36, then back down in teens, then back up to 60, then back down to 20. Now we're at 22 and change, down about 1.5% today. This is EV for commercial transport. So this would be more the trucking that would have a little bit more of a direct competition to Tesla and their EV and eventually automated self-driving commercial trucks, which to me, I think that will be the area that we will see the EVs and automated vehicles take off first. So this is a stock I'm keeping an eye on. Thursday, they announced they lost 76 cents a share for the last 9 months. For the same 9 months ending in September from last year, they lost 45 cents a share. They have about 7.6 million in cash, market cap about 3.6 billion. So I think they're going to get some more cash coming in, obviously from the SPAC. So I think they'll be all right there. I need to do a little bit more of a deep dive on it. I have one of my research guys doing it right now. He actually sent it to me last night. I haven't had a chance to read it yet. So we're going to do a deeper dive on Helion. But I like the business model, and we will keep an eye on that one for you. Then, of course, there's Nikola, NKLA. Again, this one was a SPAC, too. It was kind of the first big SPAC that for the EV world went from 10 to 90 in June, and now we're all the way back down to $20.46, about 4.5% here today. About a $7.5 billion company. If you know me, you know that I've been against this. I'm not saying it's not going to work, but I also feel that they got a bit of a self-promotion. They really promoted the hell out of their company, and it pumped it up, and something about it, man. I get this bad gut feeling. I stay away from here. I think there's just so many other plays out there until they prove themselves. Make them prove themselves that they start actually producing something and getting it out there and actually making a sale. Until then, I'm holding off on it. Same thing goes for Fisker. Another one that was a SPAC, symbol FSR. You can see again what happens with these SPACs. $10, rallies at 21, all over the place, pulled all the way back to 9, below the SPAC price. Now we're up to 17.28. Fisker's up 15% today. Symbol's FSR, if you can't see that. $4.6 billion company. I'm just not a fan of it. And it's Fisker back in the day. I think I've told the story before. I remember a colleague of mine reached out. This was several years ago. I mean, this could be 7 years ago now. I don't know. I lose track of time after about a year. About 7 years ago, let's say. And it's the first time going around. Fisker was looking to raise money, and they were getting subsidies from the U.S. government. And I didn't take advantage. I didn't partake in the deal, thank God, because then that deal went bankrupt, and now they're trying to come back again. Something about it, man. I don't trust this company at all. And again, this is just gut feeling. I don't have anything behind it other than the fact that I've seen what happened before. And again, a lot of a pipe dream in a lot of these EVs. And it's very similar to cannabis stocks a couple years ago. Some will do really well. Some will make people a ton of money. And some are just kind of trying to ride the wave. And I think you're just seeing that right now with EVs. Nikola, I think, does have a chance. I just don't want to put my money into it. Fisker, I think the chance is very small. I won't put any money into it. Let's stay away. I'll get to some good ones. Don't worry here in a minute. But another one kind of falls in that same range, and it's up huge today. I mean, this stock is up 51% today. Solo, S-O-L-O. I don't even know how to pronounce the name on it. But let's take a look at it. Pretty amazing. I mean, it was a move. Let me tell you why. I guess it had earnings come out. I assume that's why it's up. Looks like earnings came out 3 days ago. I'm not sure why it's going up this high, but man, oh man, maybe it's just riding a wave with everything else. $577 million company now. Again, just one that's a little too risky for me. And these aren't even like cars, right? These little small things. I'm staying away from it. And I never chase a stock up this much. I mean, it's up over 100% in the last 2 days, it looks like about. So something's going on, but it's not for me. That's all I'm saying. It is not for me. So a couple of these other small ones that people like looking at. AYRO is another one. $88 million company. Again, just a little too small for me, a little too unproven. I would stay away from that one as well. Akimoto, FUV. The chart actually looks decent on this one if it breaks above 8 there. Sorry, my hand's getting caught in my shirt. This new setup, I'm not quite set up with it yet. And again, I told you I set this up early this morning. I was the only one in here. Akimoto's $235 million company. This was a Reg A, believe it or not. This is my new private deal that went live through Regulation A. It's how these private companies raise money from all investors, not just the wealthy anymore. This company raised money that route, and as you can see now, it's done pretty well. There's a long-term chart of it. It went public back in 2017. So that's one we may want to keep an eye on. But again, the ones I like so far, the 3 Chinese ones, just because the market's so big over there. You all know I love Tesla. I like Tesla as well. Another one to keep an eye on is RIDE, R-I-D-E. This is Lordstown Motor. Again, this one was a SPAC, about a $2.75 billion company. It's one that I would keep an eye on as well. And then, of course, one of my favorites, there is Workhorse, WKHS, which we've had in the portfolio from $2 and change. It's around $20 right now. I still think that they will get a part of the USPS, United States Postal Service, over $6 billion deal. You know, the government says they'll do it by the end of the year, but who the hell knows what's going on with the government right now? So I don't know. I can't rely on the government doing it, but eventually they're going to do it because it's inevitable. To me, yeah, let's just hold off doing anything. Just hold this. I think this is a great long-term hold. Again, we have this in a portfolio. We've had it for a long, long time, down around $2 and change. So, yeah, that's kind of where we stand right now with EVs. It's kind of the has and the have-nots, have and have-nots, sorry. You probably will have some exposure to a couple, kind of go from there. The Chinese ones are hot right now, as I mentioned. Li Auto came out with earnings this morning. It's now up 24%. I'm happy. Like I said, I own some of it. It's up a lot in the last 2 days. So, but maybe I sell into this. I have no idea. I'm not going to tell you what I do. But the upside potential for some of these EVs is huge because at the end of the day, I don't care who the president is of this country or who's leading any other country or what happens with the global economy. There will be many, many more electric vehicles on the road in the end of the roaring 2020s and 10 years from now, 9 years, I guess you maybe want to call it, than there are today. It's just simple. It's simple logics. I mean, just think about it logically. There's going to be more. So to me, let's just run with this. This is a great way to just kind of run with something. So let's invest in it. Let's buy on pullbacks, and let's make some damn money. And as I like to say, let's have some fun along the way. So the other thing I want to do is, we're about, 22 minutes into this, just go through a couple stocks. I came up with a list, and, I love sharing this with people. Like I mentioned, bought 2 stocks yesterday for clients. I'm not going to tell you what those are, obviously. But a couple others on my list I'd share with you, and I've shared some before. And this one has to do with what we're talking about today. And this is Velodyne. This is VLDR. So this makes the LiDAR, which goes on top of the autonomous vehicles, that big round thing you'll see up there. This is one of the big players there. This was a SPAC again as well. $10, ran at 32, back down. It's at 14.14 today, up about 4%. I think this stock is going to do real well. I think this is the one that's kind of fly on the radar a little bit. It's kind of had its run there, came back. People aren't as excited about it anymore. But this is one I would definitely keep an eye on. I think there is some definite upside available here. Again, a pass back and related to the EV, autonomous vehicle, future of transportation really is what all this is related to. So I love that. Another trend, getting way off topic, but both these stocks have to do with that trend. One is, sometimes I can't type too well. One is Chewy, and I've talked about this one in the past. This is, pet food. I like the way that the stock runs up to a high, then kind of consolidates, very similar to Tesla. It's at the lower end of this range. Man, this looks pretty good right here. And if we have any type of shutdown again, New York's got some bit of a shutdown, closing early. You have Chicago going some type of shutdown. Hopefully, I don't know what's going to happen here in Maryland, but hopefully we don't have to deal with this stuff again. But if they do, it goes back to those work from home plays again. Chewy's one of them. And there's a smaller company out there that is in the same space. It's more software to deal with animals, though, is Covetrus, CVET. I mean, look at this chart. What a great looking chart, folks. There's a long term. It went public back in early 19, so I guess I don't get that far. Early 19, it kind of went straight down after that, and now we're working our way back up. But again, a very interesting play on a trend. We're looking to buy trends, and these two are definitely stocks that are playing trends right now. So those are two to keep an eye on as well. So a lot of stuff going on here. It looks good. I'm not going to share them all with you because that's what people pay me for. But I'll tell you my list right here. There's a lot of good-looking stocks right now that are looking really impressive. So any questions, let me know. I'm going to keep today's a little bit shorter only because it's been a long-ass week, and I got a lot to do before the weekend. I want to try and actually enjoy the weekend, not work the entire time. But any questions, let me know. Please comment, like, subscribe. Anything you're looking for, and I'm going to try to cover a couple topics. I might start doing 3 shows a week. Let me know what you think about the screen behind me. I know it's not perfect, trust me. We're getting there. I literally did this myself. I didn't have any of the production team help me, and I'm not that AV savvy. So we're getting there. Eventually, I said I'm going to be able to hit a button. That screen will pull full screen. I'll be able to draw on it like on an iPad. It's going to be awesome. It's going to be so cool. So we're getting better for you every day. We're eventually going to have a daily show. It's going to be great. So you're kind of along for the ride with us. So you can say you were there in early beginning. So again, any questions, anything you need, let us know, post comments. We'll try to get back to you as soon as we can. But thank you so much. Have a wonderful, safe weekend. Have fun out there. Go out there, hug somebody, tell them you love them. And thanks so much for watching. I really do appreciate it, my team and I, very, very much for the support you've given us so far this year. I'm Matt McCall, and that's been your Moneyline.
Moneyline with Matt McCall. To find more information, head over to McCallMoneyWire.com. That's McCallMoneyWire.com.